Stephen Saywell is European Head of FX Strategy at BNP Paribas, joins us now. And Stephen, last few days we have seen the euro creeping just a little bit higher. I mean, we were above that crucial 130 level. We're coming away from that now. I mean, do you see any specific triggers or catalysts behind these movements?
Well, I think what we've just seen this morning, this break of 129, is probably a follow-on from the risk-off trading environment that we saw in Asia this morning. So I think that's really the driver. Looking forward for today, as we've already highlighted, there's this French bond auction coming up at 10 a.m. London time this morning. I think that is going to be crucial, and I think the markets will take their lead from that as far as confidence in the euro is concerned.
We keep talking about the big French debt auction today, of course, this after Germany, and of course, France won't be the only country coming to the debt markets this quarter, but we're talking about 8 billion euros today. How much of a driver do you think that will be with the euro?
Well, I think it's quite important, and in the French bond market particularly, what we've seen is this trend of rising 10-year yields since very late last year. So just after Christmas, yields on 10-year French government bonds were down around 3%. They've crept up now in the last week or so to around 3.3, 3.35%. And I think that's taken by the market as being a negative a signal for the euro, and I think that certainly contributed to what we're seeing today. So certainly if we do get a more positive tone to the auction this morning, we may see the euro actually bounce back slightly on the back of that.
And of course the debt auction taking place against the backdrop of potential downgrades. How high is the risk of France losing its AAA status?
Well, that's been on the agenda for some time now. I think there's a lot of speculation of that. Certainly, nobody really knows. It's out there. Signals that we have so far is that there's no issue with that AAA credit rating, but certainly it's an unknown as far as the market is concerned.
So where do you stand on the euro in the medium-term future? I know that you're bearish, but what about beyond that? Do you see a rally as we head towards the end of the year? I
think this is a really good question. Certainly, we think that relative monetary policy, particularly between the US and the Eurozone, is really the key driver here of the euro. And part of the reason the euro has remained so strong during most of 2011 was that the ECB was keeping monetary policy quite tight, particularly relative to the US. Our view is that there's more downside to come from the ECB, more easing of policy, and that will likely weigh on the euro the next few months or so. But let's not forget what's going on in the United States. We don't believe that we're out of the woods yet as far as the US economy is concerned. We do think there is likely to be more easing from the Fed, potentially quantitative easing, the so-called QE3, probably in the second quarter. And if that does come in at that point, that may give the dollar another leg, a leg lower. And so by default, you may actually see euro-dollar rebound around the middle of the year or so.
You mentioned the ECB in the markets right now, and of course they have been providing liquidity measures for the banks because, of course, it's not just sovereigns coming to the markets this quarter. You've got an awful lot of refinancing to come from the banks as well. Do you see that risk? Do you see the pressure on the banks easing a little bit as a result of the action from the ECB?
Well, absolutely. I think certainly the LTRO that we saw in December and will continue in this year certainly is a positive as far as the European banking sector is concerned. So from that perspective, we'd be far less concerned than I think some of the fears that had arisen in the final part of 2011. We would, however, still focus on monetary policy per se from the ECB. Specifically, we think there is room for another rate cut from the ECB and potentially quantitative easing beyond that as well. Taken together, those factors should be a negative signal for the euro.
All right, Stephen, so give me your top currency to own for 2012. Where would you put your money?
A good one. Well, certainly, as far as against something like the euro, we really like sterling. We think sterling is great. We also like the yen. So certainly two of the top trades we've put out for 2012 are short euro against the yen and short euro against the pound.
Stephen Saywell, European Head of FX Strategy at BNP Paribas. Good to talk to you.
Thank you.